Ladies and gentlemen, good day and welcome to Ganesh Housing Limited Q3 and FY26 earnings conference call hosted by Go India Advisors. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rachit Gupta from Go India Advisors. Thank you, and over to you, sir.
Yeah, thank you, Danish. Good afternoon, everyone, and welcome to Ganesh Housing Limited earnings call to discuss the Q3 FY26 results. We have on the call with us today Mr. Rajendra Shah, Chief Financial Officer, Mr. Neeraj Kalawatiya, Vice President Finance, and Mr. B. Ravi, Corporate and Financial Advisor. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. I now request Mr. B. Ravi to take us through the company's business outlook and financial highlights, subsequent to which we'll open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Rajat. Good afternoon, everyone, and a warm welcome to all of you to the Ganesh Housing Limited Q3 FY26 earnings call. Thank you for taking the time out to join us today and for your continued interest and support. The third quarter of FY26 has been a period of steady operational progress for the company, even as revenue recognition remained a milestone-driven one and uneven across quarters. While the reported financials reflect the timing of project completions, leasing cycles, and the land monetization, the underlying fundamentals of the business remain strong, with healthy margins, a robust balance sheet, and clear execution visibility across our key projects. Before discussing the quarter in detail and as well as the projects, it's important to place our performance in the broader context of the Ahmedabad real estate market, which continues to remain one of India's most structurally attractive urban growth stories. Ahmedabad today stands as one of the country's most affordable large cities, with an EMI to income ratio of around 18%, significantly lower than most metropolitan markets. This affordability, combined with improving infrastructure, strong employment generation, and steady migration inflows, continues to drive end-user demand across residential and commercial segments. Over the past few years, the city has seen a series of structural triggers. These include expansion of GIFT City, the ongoing Metro Phase 2 development, improved road connectivity across the western and northern corridors, and the expected infrastructure push around the Commonwealth Games 2030. If you have seen, the Ahmedabad Municipal Corporation's recently announced budget outlines the massive push AMC is driving to give in Ahmedabad on all fronts, be it infrastructure, tourism, sports, mobility, water, digital governance, inclusivity in housing, and urban aesthetics. All this will trigger an all-round growth in real estate, with both residential and commercial projects taking a flight. Together, these factors are shaping, or rather reshaping, the city's growth corridors and driving both residential absorption and corporate leasing demand. Furthermore, these factors are increasingly influencing home buyers and investor preferences, especially among professional and new age businesses. Gujarat itself has been consistently ranked among India's top 7 states, frequently appearing the top 3 for key developmental parameters including economic growth, industrial output, FDI inflow, etc. Also, many ultra-large developments are coming up in the next 5 years, and Ahmedabad lies in the forefront of all this. Coming to the company's performance during the quarter, in Q3 FY26, the company reported revenues of 92 crores. EBITDA was about 72 crores with an EBITDA margin of 82.3%, while profit after tax came in at 54 crores, translating into a PAT margin of 58.7%. For the 9-month period, revenue stood at 417 crores and PAT at 255 crores. Despite the moderation compared to last year's high base, our margin profile continues to remain amongst the strongest in the sector. This reflects the inherent strength of our asset base, the low-cost land bank, and our disciplined approach to capital allocation. This year, there has been, as you would notice, a decline in absolute revenue and profit both sequentially and year-on-year. However, I would like to quote at this point in time a Sanskrit shlok, which goes this way: Sharmasta gato bhanuhu punar udeti diptimanaha, which translates to the sun sets only for a moment and rises again in full brilliance the next morning. This applies exactly to what our performance has been. I would say the past quarter represents a temporary pause in an otherwise steady trajectory. With structural drivers intact, we are positioned for renewed growth ahead. While revenue and profits could be lower year-on-year on sequential basis, this is primarily a function of the timing of revenue recognition and the phasing of the land transactions. As we have consistently communicated, FY25 was an exceptional year driven by large Godavari land monetization deals too, and FY26 was expected to be more execution-led. Our balance sheet continues to be a key strength. We remain debt-free as of now for over 3 years, supported by strong internal accruals and prudent financial management. This provides us with significant flexibility to fund ongoing developments, pursue new opportunities, and navigate market cycles without any pressure. Now, the more important point is the operational updates on our key projects, which are going on very well. First, Million Mines Tech Park. The Million Mines Tech Park building is now fully constructed with a total build-up area of about 13.5 lakh square feet. It also includes a state-of-the-art visitor center spanning about 25,000 square feet, designed to showcase their project and host corporate engagements. The visitor center would be a common expenditure for all the phases of the project. The leasable carpet area is about 7.2 lakh square feet. We will shortly be applying for the BU or the occupation certificate. On the leasing status, I'm glad to state that the total leasable area of 7.25 lakh square feet, LOIs already received are to the tune of 4 lakh square feet. Average agreed rentals are more than 100 rupees per square feet on the carpet. And several tenants have already commenced the interior fit-outs. Final negotiations are ongoing for the balance area, and we are confident of achieving 100% leasing before end March. Once operational, Million Mines will not only provide predictable lease income starting from FY26 first month itself, but also position the company more firmly in the commercial development and annuity segment. Over time, with multiple phases, this project has the potential to become a meaningful contributor to our overall earnings profile. The second project, which is Malabar Retreat on the housing front, is a premium residential project, and the construction thereon continues to progress steadily. The project overall is completed about 74%. In fact, the construction of the structure is almost 100% complete, and work on finishing has started. As the structures advances and the visibility improves, we are seeing sustained buying interest, which is typical for any project approaching completion. We expect this traction to translate into stronger conversions as we move closer to delivery. As you know, we started this project in March 2024, less than 2 years back, and the project is projected to be completed March 27, probably could be even earlier, looking to the schedule and looking to the completion which we have received till now. On the updation of the actual sales, the total sale value, as you know, is 450 crores. And it could be more because the pricing only improves as the dates progress. As of now, the bookings done are a sale value of almost 155 crores or more, which is about 35 to 40%. The third project, which is planned, is 191 Thaltej. At this point in time, as I can say that the plans have been submitted for statutory approval, and the approvals are expected in the next one month or so. The project launch will follow immediately post-approvals. This is a premium office, as you know, and retail also built into it. And this will have a good numbers going forward in the coming 2 or 3 years. The fourth project is Million Mines Phase 2. Plans have already been submitted for approval again in this, and we expect the approval timelines to be end of February, this month or early March itself. And the pre-launch preparations are already underway. The fifth project is Godavi Township. As you are aware, the strategic land monetization was already initiated 9 months ago and is going on smoothly. The current year, about 28 acres till now have been successfully sold with an average realization of about 14.5 crores per acre. Total monetization till now is about 38 or 40 acres. As a summary, let me state that our strategy remains focused on value maximization rather than volume-driven sales. With a fully paid land reserves across multiple growth corridors, we have multi-year visibility across plotted development, residential projects, and mixed-use assets. First, our business model is evolving into a balanced platform across land monetization, development income, and annuity revenues. Land sales remains a capital-efficient vertical, while projects like Malabar Retreat, Million Mines, and 191 Thaltej represent the next phase of development-led growth. Second, with our Million Mines Phase 1 nearing completion, we are approaching our first meaningful annuity income stream. Over multiple phases, this development has the potential to bring us a substantial recurring revenue base over the next 5 to 7 years. And third, the land monetization approach remains disciplined and value-focused. So therefore, on all fronts, the way the projects are at this point in time, we have built in a strong base, and going forward in the coming years is only going to be built thereon. With that, we can now open the floor for questions. Thank you.
Thank you so much, sir. Ladies and gentlemen, we'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Bhargavi Patel from Avinash Mentor Research. Please go ahead. Bhargavi, you may please proceed ahead with the question.
Good afternoon, sir. Am I audible?
Yes, you are.
Thank you, sir, for giving me the opportunity. I have a couple of questions to ask. So my first question is, for the 191 Thaltej project, is demand visibility largely pre-commitment driven, or will the project rely on speculative absorption post-launch?
Can I take that answer, or you're going to finish the question also?
So shall I ask the second question?
Yeah, you may do that both. Yes, I can answer both together.
So my second question is, how much of the expected demand uplift around the 2030 Commonwealth Games you think is already reflected in the land pricing and investor interest? Also, which micro markets within the Ahmedabad stand to benefit the most, and how exposes companies' land bank to these zones?
Yeah, okay. I'll take both. 191 Thaltej, it's always a mix. Such kind of projects, generally what we have seen, especially for Ganesh housing, continuously, quite a bit of them are always having an interest even before the project has been launched. But obviously, this is a very big project, and not the entire thing can always be driven by that. So, though there is a good amount of interest in that, quite a bit of that would have to be post-launch driven only. So, maybe the filling up of these things can be much faster than normal projects, but still it will be driven by both the pre-sales as well as the post-launch sales. On the other side, I wouldn't say that just an announcement of 2030 has yet been completely absorbed in the existing land price growth, or for that matter, an investment interest completely. I would see that the moment the work starts, which is started to happen very slowly right now. And when the momentum picks up, that's when you will actually see a lot of traction in the land prices as well as the investors' interest in that. So I would want to wait for another 6 to 9 months to see in which all pockets this is happening to really say that whether the prices have been already factored in or not. The same goes for any micro, the factor, other microeconomic factors. Definitely the infrastructure push, and especially what the AMC, Ahmedabad Municipal Corporation, has announced recently, definitely looks that a lot of things are going to happen on the connectivity and also the just communication part itself. And therefore, yes, in all those places where we have land, we do see good development happening in those areas in the coming months. Anything I missed out?
Understood, sir. Thank you for giving such an elaborate answer. All the very best to you.
Thank you, Bhavya. Thank you.
Thank you. Our next question comes from the line of Krish Bhatia from Anand Rathi Share and Stock Brokers Limited. Please go ahead.
Hi, thank you for taking my question. So in Q2, you had indicated that clarity on guidance will emerge post Q3. And based on current execution, what are the key swing factors that will materially alter FY27 guidance?
Yeah, so FY27, I would definitely want to wait for the next quarter also to be completed, and I'll give it along with the final results of this year. But at this point in time, I would definitely want to add one thing, and that is the way the projects have been completed. Let's say, especially the Malabar retreat, as you know, is about 450-500 crores sales project. That is likely to be completed within the next financial year itself, and also probably, even the possession handle. The way it is going, it should be completed well before March, the way it looks at this point in time, like in all other projects also. So I'm surely that entire sales will come up. And also the way the Godavari land has been having traction at this point in time, and yes, it can always have a quarter-on-quarter changes, but on a long-term basis, that's going to be one more very big addition to the entire sales for the next year. And third, very importantly, the lease rentals which we are looking at and which are more than what we had earlier projected, that's also going to be adding as almost a full year, if not full, maybe it is 10-11 months of lease rentals into this revenue. So I do see FY27 to be 100% driven by all these projects. More the merrier, of course, and we will give you the exact guidance maybe in April or May 26.
Thank you, that's helpful. And second question is, how does the expected yield from Million Mines compare with similar grade A assets in GIFT City and peripheral Ahmedabad markets? Like as future phase rollout, will the sales strategy tilt more towards leasing or selective asset monetization to recycle capital?
Well, see, if I've understood correctly, see, GIFT City and what we have, they are very complementary. GIFT City has got, it's a financial center, so it's mostly driven by all the financial companies and the financial businesses which are run there with the tax holidays, whatever has been given. And the other ones which we have, let's say the 1 Million Mines, is driven by pure IT play. Both 50% is SEZ and 50% is non-SEZ, right? So both these are effectively actually quite complementary to each other. While one caters to the financial one, this will cater to the IT and IT related services. And that's the kind of attraction we have been seeing also. So, but put together, Ahmedabad as a whole, both these, what we have in SEZ and this GIFT City, the kind of development that is happening, will catapult Ahmedabad into the IT sector and IT related services, whether it is financial or non-financial. And I think that augurs very well for us, especially as a company and for Ahmedabad in general.
Sure, thank you so much. That's helpful. That's it from my side. Thank you.
Thank you.
Thank you. Our next question comes from the line of Arvind Mahadevan from Equiventure Capital Advisors. Please go ahead.
Hello, sir. Am I audible?
Yes, you are.
Okay. So thank you for giving me the opportunity. My question number one is, out of the total revenue generated out of this quarter, how much of it belongs to land monetization, sir?
I would call it's a project of Godavari. It is 100% that. 100% project driven of land only, which is, as you know, Godavari has got both the plotted and the land itself, plus the development which is going to happen, as I mentioned earlier, from September or so this year. That is FY2027. Right. So this quarter, like the earlier ones also, it is related to that project only.
Okay, sir. So we were planning to monetize around 50 acres of land for the current financial year, out of which we had already monetized 33 acres. So the balance 17 acres, how much of that is left, sir, as on date?
As of now, 38 acres have been monetized, and about 12 acres are still left from the phase 1.
So that would be done by Q4, right?
Well, I'll be giving you too much of an advanced guidance for that. I'll need to wait and watch for that, Arvind. Let us complete the year, please, and I'll tell you for
all
that.
Right.
But the prospects are good. Prospects are good.
Sir.
Yeah.
Okay, sir. And last question being, what is the timeline for the Saltage project? When can we expect it to be completed by?
Completion is 3 years from the date of launch, and maybe a maximum 3.5 years. Yeah.
Idle time is 4 years for this kind of project. It will be iconic 2 million square feet of the development. So idle time will be the 4 years.
Okay, fine.
But looking,
fine.
Yeah. Thank
and
you.
Last question. We had already received 50% of LOI for the in the last quarter itself.
And by Q4, can we expect it to reach 100%, or will that be a variance in that aspect?
Yeah.
With regards to median mines.
Yes, by March, we expect 100% LOIs to be received for leasing. At this point in time, it is 4 out of 7.25 lakhs, which is almost like 60%.
Okay. Thank you, sir. Thank you all.
Yeah. Thank you.
Thank you. Our next question comes from the line of Henil Bagadia from Equicorp. Please go ahead.
Thank you for the opportunity, sir. So I just got some questions related to the cash flow part. Since we are going to launch the one Saltage project in the FY27, and it's going to take about 3 years, so by FY30, also we have got certain other launches, that is on the Million Mines SEZ parts. We have got other few launches on the commercial part and the residential part. And we just have about, say, 12-acre land parcel that is yet to be monetized. So how do we see the cash flows going ahead? And for the Malabar, we are at about 30 to 40% project sold out, right? Or has the number gone up beyond 50%?
Yeah, I'll tell you. Malabar, to answer the last one, Malabar is about 35-37% at this point in time. And that's around 160 crores of sales value. And the total sales value is 450. That is one of the cash flows which are going to be coming in this year itself, because the project, as I said, structures are almost 100% complete, and we expect completion in the next 6 to 8 months, right? 6 to 10 months, let's say. So that is going to be one of the main cash flows. Obviously, that's going to be used for the projects, some of them, but the land is already been paid for, so that will come as a cash flow inflows for that. The second one, it's not just, the 12 acres. Frankly, that was the first phase in Godavari. The land monetization we talked about in the first phase was 50, and maybe 50 in the second phase also get told earlier. So, in terms of the value which we can realize from that is stupendous, and therefore it will not be restricted to only the 12 acres. It can go beyond that also, provided we get the right kind of traction in that and the right kind of prices. And a lot of movements are happening in that area. So obviously we are very, not just hopeful, but we believe that the kind of a waiting which has happened will only give us more value to that land with all these developments. So that's going to be another cash flow for sure. 191 Saltage is something which will be it's not going to be a lease one. So therefore there again the land has been paid for, and the construction would begin with a very small requirement of money from our own side in terms of construction beginning. But as and when the sale of that happens, the cash flows from the sale also will start coming in. So at this point in time, as we see, there is a strong cash flow for the projects as such. But always there is the development of any new land and all that, which could be always something which can come up at any point in time. So we are planning at this. Let us see how all the traction which we are doing on land acquisition as well as all this project monetization is going ahead. That will tell us whether we do have a cash flow requirement, a shortage, if at all, for projects or temporary cash flow. All that will happen in the next 3 to 4 months. So the next year's guidance, next year's numbers, we will be able to spell out every aspect of this. At this point in time, I can say that the cash flows are very well balanced.
Just to add to what Raviji just said, we will have almost 90-95% lease tied up for phase 1 of SEZ, and we can always go for lease rental discounting in respect of those leases which are tied up. This will be in case we require, in case there is a shortfall in liquidity, we can always bank on that, and without creating any burden on our corporate cash flow, we can have this debt.
So just to get a little more clarity here, so will we be able to sell the complete Malabar project in FY27? That is about 60%. That comes to about 300 crores.
Yes, that's what we are planning, and that's what we are hopeful, because the project is very well visible at this point in time, and we do see traction. While we are making these numbers, when we had the board meeting, we had after that, the last 3-4 days, we got about 5 to 7 bookings additional. So it's going on well. So the management definitely is hopeful of completing the entire sale and handing over in FY27.
Okay. So if I just put some numbers to it, so it is about 300 crores that we might get from the Malabar project. Alpha project, if I see the cost based on our construction, since you said the land is already paid, it could be about say 400 crores. And if we actually see the Godavari land parcel based on the current sell rate, it comes to about say 200 crores. So on a macro level, I think the cash won't be a problem. Just the timing effect could be a little bit of an issue, if I'm not wrong.
Yeah, so what you just summarized, we have to put it in one sentence. There could be a temporary requirement. There could be some quarter or the other quarter which can be a mismatch. But I think overall the corporate cash flows, the way they have gone about, there will be a very good balance, and we will be able to manage for all the projects without any difficulty.
So
many times, many times we do hold back certain inquiries too, looking to a better opportunity and a better sale value. So, and if you want to really monetize on that at that point in time, if there is a requirement of money, you would as well do that rather than just wait for it. So these are all things which are very flexible in nature. Yeah, please go ahead. You're saying something?
So if you see that December 2025, and the municipal corporation actually came out with a higher FAR for certain areas, around 10 roads or so, if I'm not wrong, from 4 to 4.5. Does it impact us in any way, or we've got a neutral impact?
See, most of this development and favorable things have been done for the Western Ahmedabad. And if you are well aware that most of our land banks are located in Western Ahmedabad only. So keeping the Commonwealth development in mind, they have proposed a lot of infrastructure development as well as a new facility. So definitely that will add to our volume case.
No, so there is a specific transit-oriented zone which actually came during the board meeting of Ahmedabad Urban the Order Authority. So for that particular notification, the FSI was increased from 4 to 4.5 for about say areas and plots.
This is what the major decision which has been taken in the meeting. They will come up with the actual guideline and
actual survey numbers and
all these things will come up.
CTS number where this will be applicable. So further details, meaning minute details, are yet to be known. This is policy decision which is taken at ORDA. Now, which all land parcels will get benefit is something which lies in details. However, we are hopeful that we will be biggest beneficiary, because most of the land bank is located in areas where which are transit zones and which are in the heart of development, which is taking place.
Okay. So, if probably the Thaltej, if at all they come with particular CTS numbers, Thaltej, Malabar could be the biggest beneficiaries, or if does Million Mines also fall under that particular possible zone?
Thaltej will be definitely one.
Million Mines will be definitely the one of the beneficiaries.
Yeah,
because that is exactly at the intersection of the Ahmedabad Gandhinagar expressway.
And two very vital roads, SP Ring Road and SG Highway. Both these are accessible from Million Mines.
Okay. Thanks, sir, for this. Sir, lastly, there is a premium exemption that real estate developers get on using, on green initiatives and using more ESG-friendly material or type of construction. And since you have also got the Platinum Award, so are we seeing a significant benefit pass on? Because I think so the exemptions have moved in recently, about 7 to 12% exemptions from the Gujarat government on the.
Surely we will be biggest beneficiary, because all these nuances of sustainability which are implemented by local authorities. In fact, Ganesh, being in forefront of development, we are also in forefront of implementing all these new things which are being helpful to environment and people at large. So if you see our corporate presentation, in fact, if you see our corporate presentation, we have developed, a public garden. We have provided green spaces. We were, in fact, when authorities had not laid down, we started rainwater harvesting and all those things. Meaning we are kind of ahead. And just to give you further details, afforestation of Western Hills in India is the project wherein we have donated our corporate Ganesh Housing Corporation has donated 5 crore rupees. So we are in forefront of taking care of environment and benefits to people at large.
Okay.
So it will definitely benefit us.
Okay. So lastly, if after the completion of Million Mines SEZ first tower, so do we see the new towers actually coming up in 2027?
Yeah,
from the residential part, do you plan to begin construction out there?
At least the commercial side, as I just said earlier, we are looking at launching the second tower there, just next to this. On the residential, at this point in time, we have not yet finalized on when and how much of the area we'll be doing on that. But maybe in the next 6 months, we'll come up with plans of that also.
So since 50% of the customers are actually from the IT or ITES background, is there any demand or any potential we can put up any data centers, or the land is too valuable for a data center project to actually come up there?
The land, of course, is a huge amount there. At this point, the master plan doesn't contain any specific data center as such. But, it's always demand driven. And specifications, if we believe that it's going to be beneficial to us and also at large, it's beneficial to the occupants as well as let us say the state itself, then we might look at it. I would want to add that at this point in time, our master plans do not have any specific data center, but tomorrow it could be another day. Could be anything can happen. Yeah.
Okay. Thanks a lot for the opportunity, sir, and wish the team all the best.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Janak Shah from Wealth Finvisor. Please go ahead.
Thank you for the opportunity. Sir, I have a couple of questions. As we discussed in this call, looking at 25-26, we might end a bit lower than 24-25. and the current Q3, the revenue has come down to 91 crores, out of which 80% is the margin. So again, as we assume, that is from the land sale of Godavari. So my question was that when the shift happens from just land sale to the sale of projects going forward in the next 2-3 years, would it be good to assume that the margin, which is currently at 80%, would be like something like 30-ish, because the sales would also like increase manifold?
Well, see, 30 has never been the kind of, even for the developed projects, that's never been our margin. It's been much higher than that. And on top of that, see, the whole thing is about, it's a good combination of all those projects where there will be margins around 37-40%, as well as the land by itself. See, Godavari has got 430 acres. It was 450, now they got about 420 acres or so, or 480. So that aspect where the big traction is happening will always be there. So if at all there has to be a number given, it would be in between what you said and the 80%. Definitely, it will not be 80% in all the projects. That would be wrong to assume. But what you said is also on the lower side. Having said that, I would not want to put a number to it at this point in time. We will rework this when we are giving the guidance for FY27. We would have reworked these things, and we will be able to tell you what could be the proportion, because a good portion of our sales are also going to be from a development project, let's say Malabar Retreat itself. So therefore, I think we'll work this out and tell you.
Right, sir. So my second question was that, like, in the year 26-27, can we assume that the 70 crore annuity income from Million Mine Project 1 would start?
Yes,
and
it would.
Okay, that is it. And what would be, according to you, what would be the benefits of Commonwealth Games 2030, as we have the largest land bank in Godavari?
Well, see, that's precisely what we are also trying to evaluating at this point in time. Not much of work has started on, and therefore there has been, unless the work on the Commonwealth, it all starts with the government doing various announcements, right, which they already have done. Once the budget is done, when the announcement has been made, they have to actually put that into an order, government order, the city order and all that. So once that happens, and when the entire, let's say, opening up of all these roads and all are more clearly pronounced, that is when we think that the value of that will be increasing. Definitely, it will have an impact in the coming 6 to 7 months, wherein a lot of traction will happen in the Godavari and all, because a lot of land has been acquired for 2030 games itself by the others and the government. So I think I had already said earlier too that from September 26 onwards, the real project of what is going to be done in terms of the Godavari total land will be much clearer, because by then we believe that all these announcements and all these things would have come to a little more clarity and a very specific way of going about it. So yes, a short answer would be definitely the Commonwealth will have a lot of ups to all the land which we have. It's going to be a positive to us. How much can be the benefit? We'll really have to wait for so many things to be coming about, to be announced by the government itself.
Right. So my last question being that because of this, are we going deliberately slow because we want to have the benefits of the Commonwealth Games? And is the Thaltej 1 and 191 Thaltej the same project? And the other question.
Yeah.
Okay. Okay.
Yeah.
And sir, in the PPTs, like we are like looking at like the 191 Thaltej and also about the Godavari being launched, but like we are waiting since a long time. Any specific month in 2026 which any of the two would be launched, like there will be a concrete launch?
Yeah. Well, first, a slight correction on what you have said, Janak, and that is
right.
The Godavari one, the monetization and the development and what we have been doing it has already been done for the last 15 to 18 months already. Last September, October, I think we started. So we have begun work, but the project work on Godavari. That's what has not started, but the land monetization, which is a part of the Godavari project, has been already done, which is a very significant part of it. So that is, it's already in place. And yes, there was a slight wait and watch till last December or October to December, that is 24 I'm talking about, because we saw these announcements and we saw these things coming up, and therefore we had definitely deliberately put the project itself till September 26. But till then, whenever we saw traction, we started to monetize the Godavari project land. And that has been coming in, as I said, 38 acres have already been monetized of the total 450 acres. So that's the fact of it. 191 Thaltej, I just said we expect the plans to be there in place by March. And therefore, that project, if I have to put a date to it, in all probability in March 2026, this project will be launched.
Thank you so much, sir, and all the best.
Thank you.
Thank you, Jana.
Thank you. Our next question comes from the line of Neeraj from Kalki Ventures. Please go ahead.
Hi, sir. Since you mentioned that around 4 lakh square feet of the Million Mines project has already been leased out, will it be possible to share names of some of the tenants who have signed the LOI? Because since they started fit outs, I think it will be good if we can know the kind of occupiers you're getting.
See, we are actually waiting for the occupation certificate to come in. Many people, want the declarations to happen once the occupation certificate is there, and that's the reason where we are unable to tell you the names. But I have given you, I can give you that it's a very good combination of IT-related services, co-working spaces, and the like. And therefore, I think we have to wait for a maximum 1 month before we can actually tell. Not only is launched it in terms of telling the public, telling everyone that this OC has been received and these are the names who are going to come in. Just we have to hold on for another 1 month or so, please.
Okay. And just for my knowledge, I wanted to understand the GIFT City, since there is a tax already that has been extended. But are you sure that no IT companies or IT services companies can actually take part in the GIFT City area, because that will be like a very big dampener for Million Mines?
No, I will definitely not say that, because the companies who are there in IT and IT related services are a much larger portion than those who are there in financial services as such. And that's what is going to happen in GIFT City. It's all related to financial services sector. And that's going to be benefited by in terms of like the banks and the various other, the financial, let's say the instruments and everybody dealing in that. But IT is far beyond that, and IT related services especially are beyond that. And therefore, I would say, as I told earlier in my speech, that it will be a very good complementary aspect that in both these will go together, and probably it will be beneficial overall. And both is being beneficial definitely help the residential where we are only there, and GIFT City is only for their participants. So I think overall both these will be complementary, and we would be able to get a very good traction on the IT and IT related services for our residents.
Okay, thank you, sir.
Thank you.
Thank you. Our next question comes from the line of Aditya P, an individual investor. Please go ahead.
Hello, am I audible?
Yes, thank you.
Sir, thank you for giving the opportunity. So I have two questions. First is, will we have revenue generating out of land sales next year as well? And if yes, then to what extent?
To what extent, it will be difficult to say. But yes, it's a very, very important part of the total verticals that Ganesh Housing has. One is the lease rentals, the second is the residential and commercial, and third is the land sales. So incidentally, we happen to have the development happening in 64 acres of where the SSL Million Mines, as well as residential projects will come, or Malabar retreat, which is very close by. But on the Godavari side, it's basically land at this point in time. It's a project which is having a huge land bank.
And that monetization would always happen whenever there is a good opportunity which will come, because that's a good part of our vertical.
All right, sir. Thank you. And my next question is forecast revenue overall for the Q4 as well as for the next financial year.
Both these things, forecast revenue, surely the way we had guided, I think it will be lower than what it was for Q3, which we have seen it will be lower than what it was there in FY25. That's quite visible at this point in time. For FY27, I'll have to give a guidance only when we finish a complete year of FY26 and when we have the board meeting, let's say April or May of 2026.
All right. Sorry, sir. Can you repeat again? So you mentioned it will be less than the Q3, or you have mentioned it will be less than the Q4 of the last year.
No, I said FY26 as compared to FY25, the revenues and the profit looks to be lower the way the 3 quarters have functioned. So we believe that's how it will end up with. But FY27, we'll give the forecast in April or May of 26. That's what I said.
All right. Sir, if possible, can you just provide estimation figures in terms of figures, if it's possible?
See, when we have non-developmental one, such kind of revenues, it becomes very difficult to really project how much of the Godavari land, demand can come up, and we believe that it is needed, it's a good price to be selling at. So that is always going to be as per the opportunity. So while we had very good opportunity in Q1, Q2 of this year itself, Q3 we didn't get that opportunity and we were not happy with the kind of a sales value which was coming in. So we did not do it. But in this quarter it can come up. So to lay a hand on saying how much will happen would be, erring or rather in darkness or trying to say something which may not necessarily be proved right. So I would not venture to do that. I think we'll have to wait for this FY26 to be completed to know Q4 numbers. But I still said that the way it is going, FY25 was higher than FY26. It will remain that. That's what I said.
All right, sir. Thank you for answering all my questions.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participant, I would like to hand the conference over to the management for the closing comments. Thank you, and over to you, team.
So thank you, everyone, for the great interest that you have shown and continue to ask. All the questions are also extremely relevant and very good. But I can definitely say that I'm excited to say that FY26 has seen a significant stream of projects income and profits in million mines coming up in FY27. I mean, from lease income, Malabar retreat projects, and everything, including, of course, land monetization, as I just said. So with a strong land bank, high margin projects, a debt-free balance sheet, and an improved execution momentum that we have been seeing in all these projects, we believe that Ganesh Housing is well positioned for a steady and sustainable value creation in the coming years. That's what I can say. Thank you for the interest, and we'll see you again soon. Thanks.
Thank you so much, sir. Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.